Welcome to the Better Business, Better Life podcast with Stuart Wilkinson and
Dave Jags. I feel like it's been a little while since we've both been on the podcast together, Stuart.
Well, we've tried, Dave. We have tried, but there's some technical difficulties at my end, and so we're trying something a bit different. And so far, so good, which is a good thing.
To be fair, that's literally like the definition of what you should do in business, though, isn't it? It's like you've got to try and like up your game every now and then, or retweak it. But sometimes it doesn't work, and revert back to what you know.
Yeah, correct. And it's but as we said, with the setup we've got, so this is a bit of background. I normally record the podcast at home, but I'm in the office today, and so the technical difference I've had is about connection. But as we've said, we've taken out a variable. A variable's changed in the sense that I'm at the office versus home. So I guess it's also a consistent environment. So whatever you test, you know if it's improved. I funny story. I was listening to, and I'll put it in the show notes. There's a really good podcast interview with James Dyson, who obviously found Dyson, and Tim Ferriss, actually. It was Tim Ferriss episode. And Tim Ferriss asked the question when he was creating the first ever Dyson, the vacuumless thing, which was kind of the key thing. Like, when you went through the process, did you change a few things or whatever? And he said, no, every time it was just, I'd change one thing, because otherwise, if I changed multiple things, you didn't know what was the thing that actually made the improvement. And could the improvement be better or not? You don't know because of the combination. And so it turned out he did this for years. It took him for years, and he went broke. He's done all right though, so I think he's fine. But fascinating, it's a really good process of just understanding product, understanding what works, how to try and get improvement. Yeah, patience. Jeez, I wouldn't be that patient myself, but
I think what we're talking about kind of randomly nicely segues into what we want to talk about today, which is gross profit, because there's two ways of increasing your gross profit, and that's earn more or spend less.
Yeah. But it's also, I guess, it's that efficiency part, though, isn't it, David?
Totally.
Okay, if I'm spending $1 to create value and revenue for the business, how can I get more efficiency out of that dollar?
Yeah.
And there's lots of things about that. So, as Dave said, today's conversation is gross profit, and this is the topic. Me and Dave were just talking about this beforehand. I seem to have been talking a lot with clients in the last 5 weeks, and it's not explaining what gross profit is. Sales versus minus cost of goods sold equals gross profit, but actually visibility, understanding it, using it as a kind of a clarity on, are we moving forward, are we making money, all those sort of things. So Dave, you mentioned it. I think a good example to sort of paint the picture, you were talking about a client you've been working with recently where this conversation came up, and they obviously they understand gross profit, no problem about that, but it's such a different conversation.
I guess there's two things I kind of come across at the moment, and one is like, I've got a company who's tripled their revenue in the last 3 years, and they know they're making good money, but they don't know what aspects of their business they're actually making it from, because they've gone from being very small, just coding everything, to kind of sales rather than breaking it down. And they actually now need to know, well, what parts are returning what, are they actually charging enough in the way of labor and getting enough productivity out of their staff? Are they kind of accounting for transport costs and those kind of things? And then I guess the other conversations, which is typical to the times that we're living in, is when you're getting all of the costs upped on you, are you still making the kind of profit percentages that you need to be making? Because I think, just if we talk about electrical, just because I'm kind of a bit aware of that at the moment, they've had like 4 or 5 price increases in the last 18 months, and cable prices almost gone up over 100%. So that has to be accounted for somewhere.
Yeah.
To know that you're actually putting those prices on correctly, you actually need to know that your markups on materials. You can't just have one big pot and have it all getting merged into one. So I guess 2 different types there.
It's very similar to what, the reason I kind of thought this was a good topic, Dave, because two client examples I can reference. One, they have 3 sales channels. They sell direct to consumer through its food production business, and they have like a cafe kind of business. 1 to cafes directly, and 3rd, wholesale to supermarkets. So a very different type of consumer, and also different price points, and obviously those sort of things, and different variables in there. Obviously the cafe doesn't have freight, as an example, but they've grown really fast. They've doubled in the last 3 years, their business. And, what was working to get visibility 2 years ago across some numbers is not practical now, because it's about systems and processes and understanding how you track things through that process. And so we've been doing a lot of work to understand margin across those channels, to understand, well, okay, if we want to increase our margin on are cafe sales. That's a very different strategy because it's probably about managing their staff. It's about the food costs because they sell food and stuff in the cafe. So very different strategy to what they have to do with supermarkets. And the pressure they've had, similar to that electrical company you mentioned, Dave, they've had around 5 to 6 price rises in the last 12 months. They can't just go to, New World and go, by the way, we're putting our price up. There is like a whole review process that they have to go on a yearly basis for their category. And so they obviously want to make sure they've got real good clarity about what's the price at, what's that mean to margin, what do we need to do. Packaging's gone up for them as well, and they've had shipping delays. So understanding margin is, I guess when you start to get a bit bigger, can become, especially when you've got multiple sales channels, it can be a bit more complex. Similar situation again with a sort of retail-based business. They manufacture as well. They have a retail arm of their business, direct to consumer, and they also have a wholesale arm to their business as well. And they've got really good inventory management system to understand margin by kind of in the product aspect. But when they roll that right down and include freight, wages, all that sort of stuff, they haven't got the visibility about how's retail performing against wholesale, what do we need to do? And they want to grow their wholesale. So they don't know, well, if we grow it, what's the return on that? And what's the variables we're going to think about? Okay, if we increase, things might go up, what might come down? Is there ability to sort of scale some cost and get better buying power of some? That's one of the things we've been talking about with a bunch of clients as well. So it's good decision making.
It's when you understand that percentage as well, you can actually then start to do the math around, if I want to earn X, I either need to do this much in a wholesale channel or this much in a retail channel.
Yeah.
Retail will be a lower percentage than wholesale. If New World's pushing your product or a supermarket's pushing your product and you can turn out that much more of it, or is that an issue? If you get the same result at the end of the day, is that okay? Because that's actually what you're after here, isn't it? That's kind of the main thing to understand, but you don't know what that is unless you know your numbers.
And interestingly, Dave, one of the things that we saw when another customer was they'd grown really fast as well. And they've been using the same suppliers pretty much across all their main sort of supply lines, which fit into their cost of goods sold to develop their product. And, right from when they were a small business and now they're, 1.5 mil kind of business. And so we went for a review and we said, well, when was the last time you had a chat with your main supplier about your buying terms and your prices? And they were like, oh, we haven't. When we kind of pulled the figures up and go, well, you have quadrupled what you're spending with them. So you're in a much different position to go and actually have a chat with them and try and get some guaranteed terms, whether it's from cash flow point of view and payment or whether it's for actually locking some prices because there's a bit of variability there. And you go, well, suddenly, okay, if we can save 2 to 5% on that on a monthly basis or over the year, well, that's straight to the bottom line. And so as you grow, I guess things that you just go, okay, that was easy. Jeff's a good guy. He always supplies on time. That's all right. But kind of like what you said, Dave, like there's that efficiency aspect of going, well, if we can just get certainty about stuff, maybe have this conversation, 2 to 3%, it's just going straight down to profit. When you're small, it's about getting reliability and different factors maybe. But as you get bigger, especially when there's price rises at the moment, getting certainty of that price and getting information so you can make informed decisions with your suppliers is really important.
It's important to look regionally or however you split the company up. So say for RightWay, a national company, we get our breakdowns by region, because then you can actually get a bit of an understanding on how we're tracking, where do we need to put some more potential marketing, or where do we need to put some more effort, or which areas are performing well, and actually why are they performing well? How do you model that and take it to other areas? So you're looking for those things that you are doing well so that you can replicate and move on. It's almost like you've got to look at the divisions within your business, but then also the regions within your business. Once you get to a certain size, you've got to look at everything. And I think that's where, for a lot of companies, they have some pretty fancy software, whether it's, I'm going to say Xero is a fancy software in this example, but things like SimPro or Fergus or Unleashed or all of these different kind of products, and get my big, broad, sweeping brush out. I'd say 90% of the people I know who use them scratch the surface.
Completely agree.
They don't use them to the detail that they can. And, so then you go in to try and pull some numbers, which should be a few clicks of a button once you've set it up, and you just get a big kind of grey wishy-washy. It was somewhere in this bracket, whereas you should be able to use these softwares to give you really good detail so that you can actually understand what regions are doing well, what products are doing well, and then you can ask the question of why. And it's when you start asking that why that you can start to understand what's going really well in your business and how you replicate that and grow further.
Dave, it's funny you mentioned the add-ons or whatever you want to call it for Xero. because we do see it a lot, don't we? We see people have, they've dabbled and they're using a little bit of it, or they're using a couple of the functionality. But as you grow, and you're probably throwing more and more information in it, it's probably got complicated and it's just too hard now and that sort of stuff. But it's interesting, like what you said around that electrical company, and the fact they had price rises on cable and certain products which they obviously unsold. Xero just gives you the results, and you can break it down and slice it and dice it. But understanding these third-party sort of things, whether it's Simpo, Tradeify, Fergus, there's all those sort of ones in the construction space. That's where if you get them really singing, you can then go, okay, are we pricing our cable right? What is our margin on cable specifically? We buy for X and we sell for Y, and we charge in this fashion. Same with labor. That's a huge thing in the construction aspect and how they do labor. Because, if we just look at the headlining acts of financial, you'll get some insight, but it goes down to actions and behaviors and what we're doing on certain products, how we're charging this, how we are splitting our quote up, whatever it might be. And these third-party systems have great capability to get down to that detail, but it's only if you use them properly, really.
The other side now is like Radcliffe's for the South Islanders and J.A. Russell's for the North Islanders. Those suppliers, they'll actually send price list Simpro or whatever, and it will automatically update if you've got it set up correctly in the first place. So suddenly you can reprice your units, your blocks, your kit sets just by importing a new price list that they'll supply you with. You don't have to do any manual labor there. You've got to look at those details, because it's those details that are going to help you get that gross profit figure accurate.
Yeah. Especially when prices are volatile at the moment with price rises. And, obviously when we look at things like construction or any business where there is a transport function, whether you've got freight, we know petrol prices have come down a bit now, but there's variables there, and if you've not got visibility on that and understanding what the impact of that, it's pretty tricky to do it. And I think you're right, put the time up front on these systems, get to really understand and really work, because also that will give you efficiency and time down the track. Most of these systems, they do work really well with Xero. There's always caveats with that, I find, though. There's always a couple of things it won't do, but that's fine. It'll do 90% of the stuff. But then, your quotes are going really well, you've got the detail going through, and then you can then use that pretty well. Like, I think a really good example of how these systems work, I know most of the payroll systems. So one client where they've got a couple of divisions and they've got different staff working in different divisions, you can set up in the payroll system in the back end going, okay, I want to sync with Xero and I want this coded to this, what we call tracking code, which is a way of splitting up your revenue into, like, as you said, Dave, regions or wholesale versus retail, whatever. So the payroll means you can put the staff into different tracking codes, different regions, whatever you want to split it. So straight away, every month when you do the payroll, it's already tracking that automatically. So when you want to look at your P&L and go, okay, what's the cost for retail versus wholesale? The wages are automatically split perfectly for you. Investing, I guess, in time and understanding the capability of these systems really is a key part, I guess, the visibility part, which you talked about that day, but also the efficiency part as well. And I know our bookkeeping team, they're getting more and more involved in this kind of stuff, so clients have got accurate information to make good decisions.
It is interesting because a couple of companies I've been working with particularly recently, and the ones who I think have been going really well through, I guess, a period of economic instability, they've had a very diverse gross profit if you actually look at it per job, which has been really interesting to look at. They've got a couple of jobs that actually they only really just about break even on, and then they've got other jobs where they're killing it. But what they've found is the jobs where they're only just breaking even, they're like they're bread and butter. They're like, don't have any work today, we're off to that site, and it's just paying the way for all of the boys, all of the team, and you can kind of drop in and drop out a little bit. And then they've got other jobs where it's high profit, like really good gross profit, but they're the ones that are like out for a day on site, doing this for a few hours, bits and pieces here and there. So they're actually understanding what their gross profit is on certain jobs, and then they're using it to kind of bring the price down to win large contracts on jobs that will just sustain them on a daily basis. Like, right, we're going to go out there for a couple of hours before we roll on to this other job that's running at a much higher margin. And, I think they're quite open with the contractors or the guys they're working with that that's what they're doing. But as a byproduct of a cheaper price, they're going to have to cope with a few delays or a bit in and out. And, the guys are actually happy with that. They're like, okay, that's fine, because we're quite price conscious rather than time conscious or quality conscious. Another good example of actually how you can use that number to really manipulate your workflow and manipulate how you're stacking your timetable.
I guess the key thing there, Dave, is they're informed. They know if we do too much of one type of job, like the low margin stuff, that's the problem. But as long as we're mixing it and it keeps us busy, so it's not like we don't want that work, but We don't want all our work to be in that category. Top tips. Let's go into some practical takeaways for people listening.
This is an interesting scenario, actually, because I was talking to one of our team leaders about it the other day after talking with a client. So in Xero, you can use the tracking categories, or you can use sales codes. And to be totally honest with you, we kind of got to the end of it going, well, I don't really know which one is potentially better than the other one.
Yeah.
But something is better than nothing is what I am going to say. So even if you just start by breaking it down into your major categories or your major jobs, that's a good start, just to actually get some basic understanding, whether it's labor, materials and transport, then going into regions after that. You just need to start somewhere. And then I think once you've started, there'll be natural progressions or natural regressions. But whatever you do, you've actually got to stick it for at least a couple of quarters before you look at changing it. Otherwise, you're not going to see any form of change. And realistically, you should push towards a year so you can start seeing some seasonality before you make a change.
Yeah, good point. Yeah, I think that if you open up your Xero today, I guess the challenge for all business owners, if you go into your Xero, you can do this on your app, I think, and the first thing on your P&L says sales, and then that's it. And then it says cost of sales, and that's it. First thing is you need to review it, because what is that? Every business has different types of sales, and whether it's residential versus commercial, whether it's wholesale versus retail, whether it's, to Dave's point, regionally, or maybe got different products or whatever. But first thing is actually, and I think it's a good point, Dave. I don't have to get it perfect the first time, but at least start moving forward and go, well, yeah, I do sell these two different products, or I do sell to these different types of markets. Maybe thinking about the buyer. Cool, let's split that out and think about, okay, what do I need to do? It's pretty simple. You can just select a different category when the invoicing goes out and really think, okay, what is every cost I have in my business that is required to deliver this product? There's often a bit of a debate about wages for some people, and you can obviously have wages within the cost of goods sold. Like if you're in the construction sector, if you're professional services, you know, it is pretty impossible to deliver your product without wages. But then you might have some admin team, and they might sit below the line. So freight and transport's often a common one in there. So
probably a good idea to explain above and below the line, because
good
I feel like that's a really good accounting term and not necessarily a business owner term. We have potentially.
Yeah, we've been here too long. So above the line is what we're talking about is gross profits. If you go down the P&L, and you'll see it when the minute you open your P&L, you have your sales. Hopefully start to split that out. You'll have your cost of goods sold, and then that'll have your gross profit, which we're talking about today. What we call below the line is operational costs. And often things you can think about there, rent or your lease is the most common one. An operational cost is a cost that is not going to be changing based on the volume of sales you have. So if you sell nothing, you're still going to have your rent. You've probably signed up to a couple of years lease as an example. Or marketing is often one that can be sit by there. All those sort of things. Software subscriptions, that's another really good thing. IT. So those things are what we call operational expenses. But what we often see, and I probably you'd see this, Dave, is we see a lot of the cost of goods, what we see as the variables that you have in your business that are required to supply your good or service. It's just lumped in your operational costs. And so you're not really tracking is this going up as much as I think because I've sold more? Yes, no, or whatever. So when we say above the line, we mean gross profit and everything it requires to sell your good or service. Below the line is what we call operational costs. Was that right, Dave? Was that
no, that's good. Good to understand. It's that thing, isn't it? That once you're immersed in something, it's very easy to understand it. And as business owners, I think that's the kind of stuff that you want to understand, because you want to be able to understand your books. I had a scoping session with a client yesterday, actually a builder, and he said, I just want to understand, and I don't feel like I'm getting that guidance at the moment. That was his biggest frustration with his current accountant. I actually want to be able to look at my Xero account and understand what's going on.
Correct. We've talked about lots of examples, and some of these companies we've talked, they're good sized companies, they're not small, and they go, actually, we're not quite sure why we're making money, or how much money we're making, or why we're making that amount of money. People will probably think, oh, I should know that. But the reality is you might have known when you started, but as things develop, you get busy. You know, Xero is the last thing you think about putting some time in to get it structured right, because you just focus on customers, winning work, working with your staff. So things can easily get ahead of yourself when you're growing, because it's priority, whatever. It's just about delivering great service to customers, obviously, supporting your team, and just working on making sure the business keeps moving forward. You know, orders and that sort of stuff. So had visibility of, a year ago, 2 years ago. It is quite easy. Suddenly you're like, geez, I've even got as much availability. So often it is about systems and process behind the scenes, how you actually quote a job, how do we then track that right through the process to completion. So there's a bit, and that's what a lot of our bookkeepers work with our team on. It's obviously people are pretty busy at the moment and there's lots on the go, but if you kind of sit there going, I'm not quite sure how I make money, it's the gross profit line and sort of understanding that, having a chat with your accountant going, hey, can we have a chat and talk through this? What's made up here? What I should be thinking of? How we can split this out? Because also sometimes, and you've probably seen this, Dave, is challenging the customer going, oh, that's fine, that's operational. And you go, really? And thinking about how you can split up is a really good conversation. And as Dave said, it's just important to start somewhere rather than nowhere.
Especially once you've got your recipe fairly well tuned, you've got like good market share, you've got a good team of workers, you've got good workflow. That's when you start to increase your gross profit by tweaking small things. You go to your supplier, like you mentioned before, and say, well, wait a second, I want some sharper prices because I'm now punching this much through your books on a yearly basis. And they might give you 1 or 2%. They might give you nothing, but you don't know unless you try. Or you go and review your insurances with your broker, or you look at cost of sale, labor's gone up, so we're going to increase labor rate, things like that. And suddenly if you start making like 1, 2, 3 or 4 individual 1% changes, whether it's a decrease to the costs of goods or whether it's to your actual income, suddenly you're seeing a 4 or 5% shift, which is massive. But they're all little 1% things that you can only actually work on when you know the intricate numbers.
Correct. Because otherwise it seems a bit, I don't know why we're not making money and where do I start? Whereas if you just start somewhere by tracking it, having some visibility and go, that seems to be increasing. Why? You can look into it. I think your wage is a good example there, Dave. Yeah. I think that's probably enough, Dave. We've kept that short and sharp today. Some practical examples and thoughts. As always, any questions, reach out. That's email address, whether it's ideas of discussion points you want me and Dave or guests to have, or any questions about the topic we have, marketing@rightway.co.nz. Make sure you check out our website, rightway.co.nz, for any information. That's got a link to social media and stuff. We've got all our resources on the website as well, so just make sure you follow. And of course, wherever you're listening to this podcast, as they say, give a review, like, and subscribe. It all helps us spread the good word, and we will speak to you next week. Thanks, Dave.
We will. Cheers.